Hey everyone, thanks for tuning in. This video, I'm going to highlight one stock that Warren Buffett owns that's down 38% that I think you can buy right now. You might regret if you don't. I'm going to explain why I think that's the case. Of course, Warren Buffett is arguably the most legendary investor of all time. He doesn't get all the stocks that he buys right, but he's got a pretty darn good track record. So when Warren Buffett picks a stock, a lot of people pay attention. So it's no surprise that this stock is gaining a lot of attention because Warren Buffett owns it in his Berkshire Hathaway portfolio. So what is this stock? It is New Holdings. It's a financial services company that operates mostly in Latin America. It's sometimes compared to a PayPal, like the PayPal of Latin America. And I, for one, am bullish on that region. Growth there is very robust, and the shift to online is happening much faster over there than it is here in the US. And of course, the shift to online is good news for digital payment companies or financial services companies like New Holdings and PayPal and the others. So let's get right into why I think New Holdings is an excellent Warren Buffett stock to buy right now. First, look at the revenue growth. In the trailing 12 months, this company has grown revenue from around 600 million around July of 2021 all the way up to 4.194 billion in the most recent update. And I already highlighted that growth in this region is expected to be much faster than in the US. So there are additional risks with investing in Latin American companies. The region is not as stable as perhaps the United States might be. However, you're getting an exposure to an economy that's growing much faster. So it's a bit of give and take there. You're getting the higher risk to be sure, but you're also getting the higher growth. And so it's up to individual investors to determine if that risk is worth that potential for higher growth. And in my opinion, for me, I think it is. And the next reason I'm going to highlight is the free cash flow. As the company has grown its revenue, it has fueled its free cash flow. In the most recent update, 1.847 billion in free cash flow. Now that's an excellent number, especially when you compare it to revenue of 4.194 billion. A significant percentage of its revenue turns into free cash flow for this company. I like companies that convert a great deal of their revenue into free cash flow. It's a lucrative business model that I like to invest in. Finally, the last reason why I think this is a Warren Buffett stock that you might regret not buying on the dip is because of the reasonable valuation. New Holdings is trading at a forward price to earnings of 24, which is a reasonable price for a company with this kind of revenue growth, with that high of a percentage of revenue that turns into free cash flow. Coupled with the fact that it's operating in a high growth region of the country and competitive forces in the industry are decreasing. New Holdings and one of its prime competitors, StoneCo, are decreasing the investment they're putting into customer acquisition. They're saying, you know what? We don't want to pay so much for new customers because that decreases the profitability for each customer. Let's reduce that spending and let's focus more on profitable growth on more high value customers. And so I think that speaks well to prospective profits for this company in the near term and in the long term as well. So for all those reasons, I think this is one Warren Buffett stock that you might regret not buying on this dip.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.